The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 12th terrific Thursday edition of today's Trader's Edge show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. Having trouble with my system again. It's happening for me, even though I don't like it. And that means reaching me by email is going to be very difficult to do. So use the phone number, 877-927-6648. Of course, inside the Tiger's Den, you can go ahead and instant message me, and I will get to any of your requests out there. So let's go ahead and get this show kick-started on is this Turnaround Thursday? Can't be. It's a Thursday, not Tuesday. But we'll see if it is. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading off 19 points. She's trading at 17,692. S&P is off about 5 points, trading at 2059. NASDAQ composite down 38 points, 47.22. Of course, we have Apple breaking below the August 24th lows out there. She's trading down $2.33 with volume. 52 million shares thus far, trading out at 90.19. NASDAQ, the Russell 2000 is off 10 points, trading at 1104. DAX closed down 113 points. FTSE down 58. Gold is back $3. Silver's back 16 pennies. Light sweet crude is flat, trading at 46 1/4. To the downside, leading the charge, Palo Alto Networks. That's off $9.45. Regeneron Pharmaceuticals off $8. Intercept Pharmaceuticals down $7.50. Biogen off $6. The IBB down about $6. Nothing but biotechs to the downside. To the upside, Priceline is up $13. Jack in the Box is up 10. That's up 15%, by the way. Monsanto up about 9%, nearly $8. Sightline Landscape Supply up 27%. Public Storage up $5. Amazon's up 3. So let's begin. Let's see, where should we begin out here? I've been dealing with computer problem issues really since yesterday, so it kind of had my focus. I'm keeping my fingers crossed that this last thing, well, I hope it's not the last thing, but this next thing that I'm trying here will actually work for me. But so let's look for clues, so that's the NASDAQ. Let's focus on the NASDAQ as we speak right now. Let's look at the daily chart. Let's look at the NQ, look at a couple different things. But let's look at the NQ, see what it is that we see. So here's a daily chart for the NQ. We can see clearly this descending price channel. That price has been traveling in. It looked fairly promising this morning. As price after yesterday's down day, that price was still above the daily TAS market profile. As are the blue lines on my chart. If you take a look at the data box in the upper right-hand side, you'll see that the top of that box was 43.56. The center was 43.39. It was lined up closer to the top. That said, straight above that was Mucho Grande Strong out there. Well, at this stage here, it's a daily chart, so it only matters when the contract closes for the day at 5:15, and as we speak right now, it is back below the point of control. It's back inside the box. That says you head down to test the low of the daily profile, which would also be really testing the low of that descending price channel. So that is what the daily chart shows us. Let's start looking to see if there's anything else going on intraday, right? Just to see if there's something else that might be occurring. So we'll start with a 30-minute chart here for the NQ. And the only pattern that I've been able to find out here, let me go ahead and even grab it correctly. Let's do this here. It's an A to B equals CD to the downside. So you remember yesterday we were taking a look at the 2-hour chart. The 30-minute chart had a similar pattern, which was price moving higher, doing with less relative strength out there. That clearly marked the top. And now we have an A to B equals CD. Now the A point on this is going to be this high from 11 o'clock in the morning. That looks like that is on the trading day of May the... well, let me draw it in first, and I'll figure out exactly what day. Down to this hammer candle that formed about 6:30 in the evening. Again, I don't have the date that's clear. That looks like May 11th out there. And then from there, that's where the bounce took place yesterday, all the way up into a high at about 6 o'clock this morning. Then market moved kind of sideways. Now, what you can see here, by the way, the A point on this began on May 11th. Okay, so it's a 30-minute chart. That would make sense. So you can see the completion of a 1-to-1 equals A, 1-to-1 A to B equals CD. Actually, 1-to-1.272. The 1-to-1 completion was 43.25. The 1-to-1.272 expansion was 43.09. What do I mean by expansion? We're just measuring the A to B point, and then we're just simply expand that out. 1.272 times that length, 1.618 to 2.618 pi out there. Those would be our expansion levels to be paying attention to. Now, when price is moving down or price is moving up, in this case here, what we know is that the price is not going to stop until you see the first bullish candle form out there. Now, it doesn't mean that's where it stopped, but until you see a bullish reversal candle, there's no reason for price to stop moving lower because the cavalry hasn't waved their flag. Well, the cavalry did wave the flag. That was right here at about noontime, 12:30 to be exact out here, when it formed a nice little piercing candle, almost a bullish engulfing candle, but a little piercing candle. Follow through as we came into 1 o'clock. Now we can see that price is headed lower as we speak right now, but that low of that piercing candle is where the level of support is, 43.05.75. We can see on this 30-minute chart the price has gotten right back up into this point of control, right? Now look at that point of control. It is closer. That's the little blue line if you're watching us on TigerTV. That is priced out, by the way, at 43.25, 43.25.93 to be exact. And the bottom of that profile, 43.12. So on a 30-minute basis, we've got to confirm by the D point, and we have a TAS market profile that is slanted in a bullish bias out here. What does that mean? That means if this pattern is going to work, that we should see a bounce up to the 43.58 level. If this pattern is going to fail, we're going to go ahead and see the lows taken out from about 12:30, between that 12 and 12:30 session. Again, that is 43.05.75. So that's what's going on. Now, we'll see the same pattern here if we go take a look at the 2-hour chart, right? Because the 30-minute, we're going to use, in essence, the same swing point pricing out here. Here's that 7th wave move to the upside. You can see we're only in wave number 2. Whoops. But here's the interesting thing about the 2-hour chart. You see right here on the bottom panel of my screen out here, that's what's referred to as the price oscillator. Now, you might say, well, what the heck is a price oscillator? Actually, for those of you that use the MACD, you're using a price oscillator. MACD, moving average, convergence, divergence, is nothing more than the difference between two moving averages, right? 12 and 26. And that's what was his name, Appel, came up with. Price oscillator, Sherman and Helen McClellan, Miriam McClellan, at the same time, different coasts. They used 19 and 39. That's what Stevie uses. The price oscillator is still above zero. We'll talk about what that means when we get back from this break. Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today, With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, folks. Dow's off 31. NASDAQ Composites down to 43. And that's really our focus right now, although we're taking a look at the futures contract. So to summarize, when we take a look at the daily, what we know about the daily contract for the NQ is the top of its TAS daily box is held as resistance. Market profile, the point of control closer to the top of that box says that price really should head down to 42.88. Now we're looking for other potential signals, such as we saw that on that 30-minute chart out here, the completion of an A to B equals CD. We know that its point of control and the brand new box that formed here as we came into the 1 o'clock time session has a bullish bias out here. So you've got a completed pattern that says that you should bounce to 43.50. When I take a look at the 2-hour chart, this is one we mentioned yesterday. This is one that we said, hey, the signals out here with the NQ being the indice that moved us to the downside, that gave us a topping signal yesterday. That price moving higher, giving us a nice key reversal session, 7th wave move. It did the whole ball of wax out there. Now, I was really focused on right now where price is at, looking at the price oscillator. When the price oscillator is falling, that tells you that price is falling. Now, when the price oscillator is falling, price is falling, we don't know whether it's going to be retracement or something deeper than that. That zero line is really the line of demarcation to assist us with regard to whether, because when a price oscillator is falling and it's above zero, could just be a retracement. When it's falling and it gets below zero, it is something deeper than that. Now, deeper than that, where are you going to go ahead and target? You're going to target the prior swing point or perhaps some type of retracement thereof. In this case here, inside the NQ, at 1:20 in the afternoon, that price oscillator is still reading a positive reading of 0.27. Now, which says that the bulls could save it out here and at least get that bounce to the level that we took a look at on that 30-minute chart. Now, interestingly enough, if we go dive deeper into the hole using a different time frame out here, again, we're going to stay with the NQ. Here's what's going on the 10-minute time frame. And on the 10-minute time frame, as price was moving lower out here, just like the 30, we saw price moving lower, doing it with less relative weakness. By the way, here's the point at which where my cursor's at, the crosshair, which took place at about 9:50 this morning. It was at 9:50, between 9:50 and 10 o'clock.
is when we saw that price oscillator, same thing, down at the bottom. We saw it move below zero. Once it moved below zero, what was that telling you? Price was going to continue moving lower out here. Moving lower till when? Not until we see some type of potential reversal pattern out here, right? And we actually got that first reversal pattern at 12:10 this afternoon, when price was moving lower, doing a less relative weakness out there, and it had a nice little piercing candle on a 10-minute chart as well. The bulls came back in to try to save it again just at about 12:50 this afternoon. We can see, when you take a look at this market profile, we see where the actual battle is at. It's between this TAS box and a 10-minute profile, from right around the 43.23 level down to a low of 43.11. Now, the important thing about this 10-minute profile here is that if the 30-minute chart is correct, the buy the D point out there, and we're going to see a deeper bounce now off of these lows, we will see this area fail first. This area being what? The top of that box at 43.23. You'll see price get above it. In fact, in this instance here, you're going to need to see price get above the high from 110 this afternoon. And that price point is going to be 43.25.75. Quite frankly, if you get that, you would have an A to B equals CD to the upside that it would be forming out there. So that's take a look at the NQ. But the daily right now is the overriding issue here, and it is pointing, it's telling you and I that it wants to head to lower prices out here. Now, if the market is going to get, the NQs are going to get a bounce, it's not just going to be from Apple, but right, it would have to come from stocks like Apple, and Apple with it. Oh, shoot, that did not work. Out of the system restore thing. Just looked at that message. Wish I hadn't looked at that. In any event, let's go take a look at what Apple is doing. See if we can get any kind of gauge out here with regard to Apple. And here's what we know. This is the daily chart. And price is now below an important level of support. Not only was it the August 24th low out there, let me turn the volume out here. We know that was like about 162 million shares down there. Of course, it was August 24th, and that was kind of a wild and crazy volume session. But nonetheless, we still had a nice high volume bar moving down back on January 20th. 133 million shares out there. We're at 55 million with what, 3 hours, 10 to 11, 12, 13, 4 hours left in the trading session. It's taking out a hammer candle that formed out here a few days ago, May the 10th. So now the question is, hey, where is Apple likely to head to from a price standpoint? Well, let's put the weekly time frame up on our chart out here. In the weekly time frame, now what we've got to take a look at is nothing but retracement levels off of the lows from back here in April of 2015. That was priced at 55.01. Of course, this is post-split pricing out here, which was what? It was a 7-to-1. So it's really about $400, 7 times 55, whatever that's going to equate out to. But $55 from that $55 low to the 131 high out here, 85.39 really becomes the potential price target. Look, there's an A to B, a large A to B equals CD to the downside. We can go ahead and project what that price level is. That would say that Apple would be targeting the 1-to-1, takes you to 81.28 out here. So Apple is very likely headed to 81.25-ish to 85.39 to the downside. Does it mean that it stops there? No, not necessarily. But that becomes our price target unless there's some other pattern that is out here. You know, if you just give me a second, I'll go ahead and spit it out. I promise you. And how many see here? Is price moving lower with less relative? Well, it is. So this is kind of an interesting chart out here. So let me put the daily chart out. All right, you and I were always looking. We know that the markets are more consistent with regard to how they make bottoms and tops out here. And now Apple, with today's moving lower, you can see the two hammers that are on the that formed out here. One on May 2nd, one just a couple of days ago, May 10th. Right, you close below a hammer candle. You're long, you're wrong. However, what we can also see out here, this is the daily chart we're looking at for Apple. We can see that as of right now, price is moving lower, doing a less relative weakness out here. Now, this pattern could go away. There could be some real momentum to the downside, and this pattern will just simply vanish. But as we speak right now, that pattern is in play. It's not valid till you see the bulls rush in. So could price not get down to the levels that we looked at? Absolutely. And we would see it on our chart. It would communicate it to us out here. And that's taking a look at the daily chart for Apple. With regard to the NASDAQ composite itself, if we go see what it is doing, let's go see where we're at in its advanced decline oscillator out here. We're not down to lower lows here just yet, but it certainly is trading with inside the May 6th
candle session out here. And what I was looking for was to see on the advanced decline oscillator, would we possibly make it a lower low with a higher low here? And at this stage of the game, it's not a pattern that's in play here just yet. But you are inside of that session. So the key level to be watching inside NASDAQ Composite, 4736. Whoa. The number to be watching is 4736.16. Yeah, okay, 4736.16. You're at 4721. Why do I say that? Hey, volume or not, you close inside a swing point. It says you can go, in this case here, test the bottom. Heck, you could take out the bottom. That would set up an A to B equals CD to the downside. In the NASDAQ Composite, just to give you a feel for where that would take it to, that would take it to, even though the one once is 4526, I would say not likely the case. More like 44, 48, 43.50. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Dow's out 20, S&P is down 5.
have a request from Danny in the den to take a look at copper. So let's go look at the current contract for copper is July. So let's go take a look at it. First thing that pops up on our screen, we've got some volume. I'm going to go ahead and turn that off for the moment. We can also see our TAS market profiles out here. We can see that prices below daily and weekly market profiles out here, so that is a bit bearish. We're going to go ahead and turn those off. By the way, the next level of resistance out here, and any bounce is 216. That would be the bottom of the daily box out here. Now let's take a look at what the pattern that I see that we're looking at is a potential double bottom, a potential consolidation area, right? If we take a look, we'll use our little, let's use a, I don't know if I want to use the line chart. Yeah, I'll use the line chart out here, right? So if we take a look at this high that was formed back here on this trading day of March the 4th, see how this level was tested, which is right around the $2.30 area. Now, what we can also see is right down here, right about where price is trading right now, and no bullish reversal signal or anything. But we can see this, double type bottom out here, right? And that's a level that is being tested. So if we're to see a close, really, I mean, theoretically, practically, you would be looking for a close. Let's just do this. I'm going to draw it right here, really draw it where I should, because here's where you had the bulls rush in. They had this nice little four-river morning star pattern that formed. That's between the days of April 7th and April 12th out here. So it's really the number you're looking at is $2.07, we'll call it $2.08 out here. Now, if price is unable to break through this level, then that says that some retracement or move back certainly to the top of that weekly box, to the bottom of that weekly box, 216 would be in order. And if it gets back above that, then we just simply have more of a consolidation, get all the way back up to 230. Likewise, if this area gets broken through, then what we've got is we've got our nice little measured move. Our measured move allows us to estimate the where price would drop down to. And what we'll see here is on that measured move, it's going to drop down, or it would drop down below the previous swing point from January in 2015 out here. That would actually get down to about 185. But right now, it's got to be able to bust out those lows. And if it does, then I would say your price projection on this, Danny, is about $1.85. If this level holds as support, you see another bullish reversal candle tomorrow as an example, then you're going to run and bounce up to that TAS weekly, the bottom of the box, or all the way back up to the top of that consolidation at 230. So I hope that that assists you with your trade, or how you're taking a look at the copper trade out there, HG, and we're looking at the July contract out here. Again, email's not working, so you've got to give me a call if you'd like me to take a look at something for you. Let's take a look at some individual equities out here. You know, we don't really have much to look at in the case of gold or silver. We're beating that till it's a dead horse, until we see that thing move in any one direction with significance. I believe, again, that significance is going to be to the downside. You got the U.S. dollar index. Now, we've talked about that, how that has formed a nice bottom at the consolidation. Now, if we take a look at the U.S. dollar index out here, you're going to see two descending price channels. You're going to see the red one, the larger one, but we can also see that where price stopped was also at kind of like a descending price channel with inside the descending price channel. And that is where price has stopped here recently. So if price is able to get above this level, and you would say, well, what the heck level is that? I'd have to say price right around 94.15, 94.20, something like that. Let's just use the prior swing point from a couple days ago on May the 10th. And the high was 94.33. You get above 94.33, price will go ahead and run up to the top of the descending trend line, channel line out there. And if price gets above that, then what we have is a change in trend in the U.S. dollar index. I anticipate that is really what is going to occur out here. We are going to see, of course, I'm going to say at some point in time, well, shoot, anybody can say that. Well, I can't give you what day that's going to happen, but the reason that I believe that, it's really twofold out here. One is the long-term weekly consolidation that held out here, so you couldn't bust out the lows, right? What are you going to do? Now you're going to try to go bust it to the upside. 95.21, which is nothing more than a 0.382 retracement of the last move down. That should be a no-brainer out here. But likely we're going to see something more than that. Those large commercial traders, the way they position themselves in the currency market is that they are looking for the king to become the king again out here. So I think the U.S. dollar index is on its way back up in that 100 level out there. Let's switch over and take a look at some individual stocks. Let's go see what Priceline is doing. PCLN up $11 out here. This is the weekly chart. But let's go ahead and put the daily time frame for Priceline up here. We know in the case of Priceline, this thing had gapped up, huge wide-ranging bar that took place on February 17th. And that is a breakout extraordinaire. Volume-wise, what did it do on that trading session? Well, you had volume of, 2.4 million shares. Now, what's interesting is that when Priceline gapped to the downside, it did it with huge volume, 2.8 million shares, but it found support right smack dab there. Now, there's always the possibility of an island top forming, but at this stage here, price is just simply clawing its way back up to go ahead and fill that gap. That's what it looks like. We'll turn on the profile, see if there's any other resistance out there. Well, if there is resistance, it's going to be today. And that today, why do I say, well, it's the price level that formed really a couple of days ago. It is the top of the daily TAS market profile at 1286.86. If price gets above that, you ought to see Priceline go and at least repair that broken window when it gapped down. That means get up to the low of May the 3rd, and that is 1335.08. PCLN being the ticker symbol. Let's go take a look at Jack in the Box out here. Jack in the Box. Hard to believe that restaurant is still around, but in fact they are. And today this thing gapped up. It's got a wide-ranging bar. It has accelerated volume, and unfortunately, and it is nice that it's trading right above its TAS weekly profile out here. However, what it's also doing, it's running right smack dab right into resistance, which was this huge gap down with volume. February 18th, there was 8.2 million shares. So very likely what Jack in the Box is doing, it popped out of the box here this morning, but run right into resistance. It's probably trading in a consolidation somewhere between 78 to about the 62-ish level out here. Ticker symbol there, of course, is JA. CK. Monsanto, you got MON as a ticker symbol. They're up 8.5%, up $7 and change out here. Monsanto's got some big volume behind its move. It has sold off a bit since the open out here, but big volume, as I say, 13 million shares. It is trying to, what is it trying to do out here? In the case of Monsanto, it's contending with a swing point that has got plenty of volume to be able to clear. That's the trading day from December 23rd. Of course, December 23rd, how are we going to really gauge the volume here? 3.8 million shares out there. What else is let's go see if we've got any profile information out here. And the answer is no, nothing that is useful to us with regard to any other forms of resistance. So on a longer term chart, maybe we can get some type of feel for what Monsanto is doing out here. And looks like the answer is no, not really. Volume-wise, from a weekly basis, it's going after a swing with 9 million shares. You've already done 21 million shares. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up off 40 points right now. S&P is down 7. Question in the den from Dano from Hawaii 5-0. It says, looking at shorting AGU right here. So let's go take a look at ticker symbol AGU, Agrium. Let's see if we can help Daniel. Let's help identify where the bulls and the bears are and what the message is. So as we take a look at this equity, first thing that stands out to me, very similar to one of the charts that we looked at. We looked at copper, right? So we can see this double top-ish type pattern out here, right? So we can see that hasn't been able to bust out the highs. We can also see down at the lows this double bottom-ish pattern out here. And we could put it a little bit lower, but right around here, right around this 80 level out here. So we know that it's been consolidating at this stage here between 80 and 115. First thing we would say, Dano, is if it's able to take out the swing point from July 29th, which has got 13 million shares, and you're only doing 3.5 million shares today. If you break that out, then you've got a move equal to that consolidation, that double top-ish. That's about a 35-point move out there. So you don't have a confirmation there as we take a look at it. We've also got, when I take a look at the daily chart out here, what else jumps out at us? AGU. This is the wheel. This is the weekly chart, by the way, that we're looking at. So we can clearly see that consolidation. Okay, now let's go take a look at the daily time frame out here. So on the daily time frame, down at the bottom of that consolidation, so this is helpful to us. We've got a nice little hammer candle that formed all the way back here on April the 15th. So that's going to be another key level for you to be watching, Danny. That low out there is 81.17. The volume on that trading day was 1.3 million shares. So the volume I gave you on the weekly, forget about that. I had a weekly chart up. I didn't realize that. Although it's helpful, right? It is helpful to take a look at it, right? On the weekly chart, you're going to want to see it bust through those lows with more than, right here. It is from the week of July 29, 2013, 13 million shares is what you need to see that thing really get busted out with. And you're only 3.5, and we're already into Thursday out here. Let me go back to the daily time frame. Let's go ahead and put some profiles out here. Give you some other targets or levels to be watching. And we'll take a look at both daily and weekly. If you're looking to short right here, right now, Danny, I would say, your better approach might be to wait for price to get up to the top of this weekly box, which is priced at $90.59 out here. The weekly profile, which so far that point of control and the daily top of the box has held as resistance. But you'd sure like to be able to see it get up and test the top of that weekly box, which is really also, you'd like to see it test the bottom of March 21st, which is 91.49. You'd like to see that occur with less than 800,000 shares, 835,000 to be exact out here. So, if you're going to take the trade, and I don't know if it's a short-term trade, what the time frame is that you're looking at, look for this to find some support at either 83.52 or around the 80. Let's see, the bottom of that hammer candle, which would be 81.17 out here. That's what I see in ticker symbol AGU. I hope that helps you out. Jason Day, 9 under. Wow, at the Players Champion. How many holes is he through, Terry? What a great course! What a great course! If you haven't played the TPC up at Sawgrass, you really ought to do that. I've got great memories. Played in many tournaments up there, not PGA tournaments, but many member guest tournaments and other tournaments. The very first course where I birdied, the very first time I played it, I did pat myself a little bit on the back. I birdied 17 and 18 out there, and it was during an NFL tournament. And that was a lot of fun. But just a great track to go watch a golf tournament up there. In any event, and I forgot that it was on, so I don't know why I've got CNBC on in the background. Should really be watching that. Okay, so what else? Let's look at a couple more stocks out here. Again, post something in the den if you'd like me to take a look at it out here. If you'd like me to take a look at something, let's look at some things moving to the downside. Well, we know the IBB is struggling because the core of the stocks that are moving to the downside are related. Now, in the case of the IBB, and I think I looked at this with one of our listeners just a couple of days ago, and I think it might have been the IBB that, short-term memory issue, especially when I'm focused on a gosh darn laptop out here. In any event, I'm pretty sure we looked at it, and we said to be careful on this trade, right? Now price is right now trading right at the weekly box, the bottom of its box out here. Now it's trading just slightly below it. The bottom of the box, 250.41. It's trading at 249.71. If it's going to find support, this is a daily chart we're looking at. Right here and now is when it would do that. Now it's also trading into that swing point from back on the trading day of March 17th. That has got 2.8 million shares. We've done 1.7. So it seems like it's testing that on light volume. I don't know. Oh, shoot, I don't even have that spreadsheet up on my screen out here. So I can't do the straight line math that easily. It's also got a volume component that it's going against, which is light volume for sure, which is the trading day from February the 9th out here. Now, in order to get a rejection, you would need to see a close above 253.21. You're at 249.63. So any closes lower, light volume or not, says that more likely than not, right? Because it's breaking a little rising price channel. You would go test at least a low of February 9th. So the key levels to be watching today inside IBB is the high from February 9th, 253.21, and the low, 240.03. If we put this on a weekly time frame, let's get a feel for what's going on the weekly time frame out here, volume-wise. That swing from the week of February 8th had 14 million shares, and you're going to come in way light on that, because you're at 5.7 million shares. Nonetheless, you're still trading inside that until you get a rejection of the swing point, which is either closing back above the high or testing the low on lighter volume. You don't really have any rejection, but price is trading, as we say, right on its TAS weekly profile. That's for the IBB. Palo Alto Networks, PANW, that is not inside of the IBB. So let's go take a look at it, see what it is doing out here. Let's get rid of that larger A to B equals CD to the upside that it completed out here. This is the weekly time frame. This shows us that very likely Palo Alto Networks is going to go test that swing point from back on February 8th or somewhere in the vicinity of 117.99 to 124.89. Now that swing has 17 million shares. This is also pulling back with light volume, although it's probably not going to get there this week, so it would be next week's light volume or next week's volume that you really use as a benchmark. Now, Palo Alto Networks, let's turn off the profiles out here. We can see that it's had a nice little breakout not that long ago on the trading day of February 25th. And the follow through on the 26th. Volume there was, I'd tell you, but it was hidden. It is 5.9 million shares, and today you're pulling back into that area with light volume, 2.9 million shares. Nonetheless, you're taking out a swing point that only has 2.5 million. So Palo Alto Networks now in a confirmed A to B equals CD to the downside, and that ought to give you a price projection not that much lower. 126.75, maybe 118.44. Steve Rhodes with TFNN. We got the Dow off 22, S&P down 5. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 19, S&P's down 5. Let's go take a look at the indices, ETFs out here. Get a gauge for the type of volume or lack thereof inside the market. So on this pullback, so far, inside the Qs, you've done volume of about 20 million shares. We are, 4.5 hours into trading as we speak. So we've got 2 hours left in the game. So we'll just divide by 4 just to make it easy. You've done 19 divided by 4. It's about 5 million. We can add another 10 million to it. That would get you up to about 30 million shares. And it's going into 30 million shares from the trading day of May the 6th. So you're pulling back with similar type volume. Any close inside 105.60 says you go test the low of 104.40. That is on the QQQ series ETF. If we take a look at the IWM out here, the IWM is already tested. A little breakout area that took place with 40 million shares on April 13th. You've done 20 million shares, so it's coming into that breakout area with light volume. The last time down, we saw 25 million shares, so it's got the volume there, and that is a swing point that would say, hey, that could be an A to B equals CD to the downside if there were a close below 109.54 with volume. And you're going to get that today. So key number to be watching inside the IWM is that 109.54 level. Inside of the SPY, 52 million shares to the downside. That is testing the most recent swing, which had 89 million shares. So we know that that is going to be light on volume. A rejection of the SPYs would be a close above 205.77. Your low so far today is 205.37. So you'll want to watch that number inside the SPY. Inside of the diamonds out here, the diamonds have tested the swing. Of course, they really haven't been doing a whole lot. I don't know that I want to use the diamonds out here for a gauge of the futures contract would be better for us to look at. Nonetheless, the swing point last time down there was 2.9 million shares. You're down with 1.8. Add another A. You're a little bit light, similar to a little bit light with regard to the volume. So perhaps watch the IWM and the SPY for signals. Of course, what you and I know is what we really want to watch are the 30-minute charts, the 10-minute charts for the NQ out here. Today, we're making it all about the NQ because it's really all about Apple. We know we've got at least short-term bottoming patterns inside of the NQ. We may have on the 10-minute chart out here, we may have that A to B equals CD pattern that you and I looked at. That gives you your first price projection of 43.32, 43.37 would be the area that you would be targeting out here. Again, we've got that nice little 30-minute bottom that is out here. Where is it that things could bounce to? Well, inside the NQ, if we take a look at the daily, quite frankly, getting up to 44.52 would still be bearish. 43.72 is the number that I'd be looking at out there. Inside the ES Mini, 2086 is not out of the cards. Inside the Dow Futures, 17,936 is not out of the cards. And inside the Russell 2000, 1138. But things look pretty ominous out here. And that's really all that I've got to say. Hey, folks, won't be with you tomorrow or any day next week out there. So I'll be gone for a week and then back the Monday. I think it is the 23rd out there. So and that means I won't be answering emails and things of that sort. Just a time to rest the brain, so to speak, out there. But stay tuned because you are in good hands. We are the good hands people out here. And so stay tuned. It is Terrific Thursday. You know what that means. That means we've got our polar bear, David White. He's going to be up next. The Tom O'Brien Show from 3 to 5. And Andy Heck, as Dave Mason would say, to bring it on home. So have a great Thursday. Have a great weekend. Have a great week next week. And I'll see you on the 23rd of May. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.